Pepe isn't just a meme coin. Pepe truly shows how the market psychology is behaving. In this video, we're going to look at the data. We skip the hype. We're trying to figure out where the price is headed from here, because there are some indications that Pepe might actually see a quite quick rally in the near future. Now, of course, there's a lot of correlation in crypto. When Bitcoin goes up, many altcoins go up. When Bitcoin crashes, most altcoins crash. And that's why I think it's very important to look at relative valuations. How is an altcoin doing relative to all the other altcoins? Is it currently outperforming? Is it underperforming? Is it really worth the risk to get into something like a mid-cap meme coin? What we see over here, that's the Pepe price relative to the altcoin market cap. So this is not a US dollar price. This is relative performance. We have seen very quick rallies of almost 500%, but we've also seen devastating crashes lasting almost an entire year and bringing Pepe down, relatively speaking, by almost 90%. Since the middle of 2024, we are in a somewhat constant trading range. Every now and then, we see very quick price appreciations that then follow with slower price bleeds. Now, what I think is going on here is that a lot of people bet on falling prices of Pepe, or maybe people simply take profit over time. But every now and then we see those quick rallies, and that's maybe to liquidate all the shorts, to liquidate all the people that are betting on falling prices. Market makers just buy up the supply very quickly, move the price so quickly that nobody can react to those movements. Because have a look at this. This is the open interest, the amount of bets that are currently made on the Pepe price. This topped at $1 billion in the middle of last year. And currently it's rather at a low level, below 200 million. Why does this matter? It matters because there's correlation between the price of Pepe and the open interest. When open interest goes down, the price tends to bleed. When open interest goes up, there's a chance for a price rally every now and then. Now, there has been a change in the funding rates for Pepe in the last few weeks. And this does matter because it indicates that now there's potentially more and more retail investors betting on falling prices, which could again induce a short squeeze, a very quick rally in the price. Pepe is among the most viewed cryptocurrencies, and it's the fourth largest meme coin in terms of market cap. Still, its market cap is 1.4 billion. Number one is Dogecoin with 14 billion. So that's potentially another 10x if Pepe was to flip Doge, which isn't very likely, but still, it gives a reference point how much maximum upside there might be. Now, I like to use trading rules. I like to determine the best trading rule for an asset because following the narrative of the day, following the news of the day, that's usually not quick enough. Very often when a narrative is out, the price has already adjusted. But using statistical methods to trade an asset removes all the emotional component. It makes performance more consistent. What we see over here, that's the best moving average backtest for Pepe, which is the 8-day simple moving average. The idea is that we buy whenever we are above the moving average, we sell or bet on falling prices whenever we are below the moving average. Have a look at the Pepe price at the top and at the performance using that strategy with a fixed betting amount. We can time the market quite well this way. And we have included trading fees in this analysis as well. There is 0.05% trading fees. That's the typical perpetual futures swap fees without discount. And we've got 11% financing fees. So that's for the long side, you pay 11% per annum and you get 11% per annum if you short, if you bet on falling prices. That's typically what happens with larger perpetual futures platforms like Hyperliquid, for example, or Binance. Currently, we are above that 8-day simple moving average. So that's our first positive sign. But we can take it a step further. We can look at the best combination of two moving averages, and that usually tends to outperform simple price crosses. So we look for the best golden cross, we look for the best death cross. But we have to figure out what's the best moving average combination for that strategy, again, based on data. And here is the result. So on the x-axis, we've got the slow moving average duration. On the y-axis, we've got the fast moving average duration. And the best combination is over here. That's what has created most return. So let's have a look at the numbers over time. Buying and holding Pepe over the time period would have given us 140% per annum with a lot of volatility. So that's 169% volatility and a maximum drawdown of 88%. But have a look look at the golden and death cross strategy using the 6-day and the 9-day simple moving average, the best combination. It gave a much lower maximum drawdown, only 55%. It gave us less volatility, and it gave us an annualized return of almost 500% every single year. That's then how this looks like over time. Again, that's with fixed bet sizing. So if you get a buy signal, we bet, say, $10,000. If you get a sell signal, we short with $10,000. And we do this always with $10,000 irrespective of our portfolio size. This tends to reduce volatility quite nicely. The problem, of course, is that our capital doesn't really compound, and we are also not using optimal leverage. But let's talk about this in a second. Let's first look at where we currently are. When the shorter term moving average in orange is above the longer term moving average, then we are long, and when orange is below blue, then we are short. Currently, orange is above blue, so we are long, and the cross happened on the 3rd of April. Let's optimize leverage. So for the long side, that's 2x. For the short side, that's 1x. The long side gives us much more return than the short side. So the leverage on short isn't as important. We might as well just go in cash whenever we have seen a death cross. Still, it's good to know that we can go all the way up to 2x for trading Pepe with that approach. When we then include compounding, so we bet our entire portfolio and we do this with a 2x leverage, then we get the following return. Much more volatile, but also much higher. Of course, we don't want to do this with all of our capital, but it's one of the riskier positions. The equity is in blue, buying and holding Pepe is in gray. The portfolio measured in Pepe tokens is here in purple. So pretty much every year we tend to have more Pepe tokens than the year before. What's the annual alpha? It is massive. But again, this is extremely risky. We are going 2x long with the entire stack. Again, buying and holding gave us a bit under 140% per annum, but trading the 6 to 9 day golden and death crosses with a 2x long and 1x short gave us more than 1,000% every single year. Our maximum drawdown, unfortunately, also becomes very similar to buying and holding. So this is definitely at least as risky as buying and holding Pepe for the long term. This is not a risk mitigation strategy. This is a return maximization strategy. But the returns can be very nice, right? The best year in 2024 made more than a 40x. 4,000% return. Holding Pepe directly only gave a bit over 14x, so a bit over 1,000% return. Now, all of those numbers are extremely impressive, and of course it doesn't look very realistic that those rules will perform just as well in the future. But I still think that if something traded in a particular pattern, in a predictable pattern in the past, that at least this will to a degree also reflect in the future. Maybe it won't be thousands of percent every single year, but maybe a few 100%. That wouldn't be too bad. I don't even think that the 2x leverage is too problematic, because Pepe is very likely less volatile today than it was in the early days. And we are looking at the entire price history here. So let's say we are really bullish. Let's say both the golden cross and the price cross strategy, since they are both optimistic about Pepe. What would be our upside in the very short term if we entered with 2x leverage? Here I think is the answer. We have seen already a similar short squeeze at the beginning of the year. And we started the video with the negative funding rates. So many people currently betting on falling prices. If we see another similar short squeeze, the price could very easily increase by 60%. And then doing a 2x leverage on that more than doubles the capital. Now, I don't have a crystal ball either, but I do think that the setup looks quite interesting. Again, for risk on capital. If you're trading meme coins anyway and you're okay with the volatility, you're okay to see a position go down temporarily by 80 or 90%. And maybe now is a potentially good entry opportunity, because again, the momentum seems to currently be turning around. There are a lot of bad signals with the strategy as well, but at least historically, it tended to outperform buying and holding Pepe quite consistently. Again, this here is the portfolio line measured in Pepe. Now, the platform that we are looking at here, that's Bitcoin Strategy Analytics. So it's a backtesting platform available visible to all premium members of this channel. You can also set up alerts. So let's say you want to get an email whenever a buy or sell signal is triggered with a strategy. You can just click over here. You can also get signals via Telegram. The signals also send the corresponding chart. And I'm using this for several strategies already. Here are some strategies for Bitcoin, and Ethereum, and Solana, and BitTensor. And the community, of course, has also created quite a lot of interesting results. If that sounds like too much effort, there's also automatic copy trading. So for the Bitcoin trading strategy, we created a copy trading vault half a year ago. And that's already up by 600K. So yeah, let's see where Pepe is going from here. If you got some value out of this video, feel free to give it a like. It will help the channel grow. Feel free to also subscribe. I publish videos regularly. See you next time on YouTube, or see you potentially also in premium. Cheers.